My name is Chris Doornbos, and I'm the CEO of E3 Lithium. E3 is a lithium development company focused on one of the largest Canadian resources located in Alberta. We are just going through our pilot right now, demonstrating direct extraction processing for this massive opportunity in Alberta to grow resources and grow production for lithium, creating a lithium jurisdiction here locally in the province.
Chris, good to see you. Welcome to London.
Yeah, thanks. First time with you in London.
First time with me. Yeah, we've never met after all these years.
Yeah.
And apologies for the weather, of course.
Yeah, as you do in London.
Right. You're here as part of a kind of Canadian contingency doing what?
Yeah, there's a Canadian symposium going on
this
week here. It's sort of in conjunction with the LME week that's happening, and there's a benchmark week. So busy week here in London for Canadian mineral or mineral companies in general.
Metals super cycle is here. We're starting to be a super cycle from humble beginnings. Let's talk about you, because when we first started off, this whole DLE thing, it was kind of like a black magic, or black box, or black art. It basically misunderstood. You've had to go through a process of kind of proving out what it could do for you, and indeed for some people, what it even is. So can you just maybe take us back a bit and go, what were the kind of major moments along that process which you think kind of have worked for you?
Yeah, I think a lot of the development in the early days across the board, not just us, but in other companies as well, focus on the development of the material, the chemical, the sorbent or medium that's used to do the extraction. And then focused after that in developing the processes around it, how you basically solid liquid separation, how you interact the brine with that chemical, the solid chemical, and how you separate the brine from it again. And, that development, a lot of it is well-known technology in the ion exchange, solid liquid separation world, but needed to be applied directly to lithium. We needed to find a material that was selective only for lithium and then develop that and perfect it. And so that's a lot of the companies, including us, have been working on that since probably around 2016, 2017, a lot of the companies started. But now, as you say, the black box is open. I think it's pretty clear what's being developed. It's a lot less, people are still running around with proprietary technologies, but I think it's a lot less secretive. We basically all sort of narrowed down on two different chemistries, and with those two different process for each of them that seem to be working, and the whole industry, a lot of it independent of each other, has come into the same flow sheet.
Right.
And I think that's an important factor in this. And in the last couple of years, you've really seen the companies refine that flow sheet down. And now, if you look across the board, the companies using the aluminum-based systems all use a very similar process. The companies using the manganese-based systems all use a very similar system.
Yeah.
And then the downstream from that, again, being refined by those big equipment manufacturers, tailored now to the feedstock that's generated from the DLE, which is high pure lithium chloride or lithium sulfate, can be processed into a lithium product. And that's not new, but now that you're seeing these companies specifically tailor their process for that feedstock. So the whole thing has really come to the commercial head.
Well, I think there's a lot of new lithium companies, brine companies, hoping that there's something they can either license into or purchase off the shelf, quite frankly. So
exactly.
We can come back to that. They might be a bit late to the party at that point, but who knows? For you, this sorbent, what were the actual challenges? Because you talk about in some of your literature about, well, it's spending sort of less time on the sorbent, so therefore that's good news, presumably in terms of energy saving, in terms of what are the other kind of benefits you were looking to achieve?
Well, I think the big criteria, we outlined this in an announcement back in June, sort of what our key performance indicators were against that sorbent and the process. And it really is the two combined. One is the selectivity. So how much lithium do you get out versus everything else? And so we measure that in the purity of the concentrate coming out.
Right.
So we said, well, we want to see better than 80% pure.
You're hitting 80 at the moment, aren't you?
And we are, yeah.
Right, okay.
Yeah. And we want to see something that takes it from 75 milligrams per liter to, we said above 600. We've announced that we've gotten above 900. So we're seeing really good performance there. Obviously, at the end of the day, recovery is king, because every bit of lithium you can get out per unit of volume you produce obviously makes more money. So your overall economics are supported by that. So it's really, and then the other one, and it's not the one that people generally talk about, but it's actually the lever that you're adjusting with DLE is the flow rate. If you can flow faster across the medium, and this is what you're talking about, the rate at which you can take the lithium out is the flow rate of the brine across it. And if you can increase that flow rate of brine, your equipment is smaller because you don't need to hold the brine as long on an individual brine basis. And that is incredibly important because it comes down directly to your bottom line, your capital and operating cost, if you can make your system smaller. And so we also have a metric for that we've outlined. We want to be greater than a ratio of 3.
Right.
And we've explained what that is, and we'll continue to explain how that is calculated. And as we release the final results, which are coming here shortly, we'll actually outline the details of all of this work that we've done.
Right. You put out some early data with regards to the pilot plant. Because I get what you're saying, right? You got to prove not just the technology works, but in terms of getting that efficacy, increase, refining and tweaking. It's engineering 101, right? So you're going to have to show that you can achieve this at scale. So pilot plant is, well, the first thing you got to get right. Yeah. So when you put out some numbers recently on those, just give us the sort of top line numbers there so we can sort of get into the conversation.
Yeah, so we said that we were able to achieve, and they are preliminary, so we will have the final results out here shortly. But we basically outlined that we're able to get above 80% purity. We're able to get over 900 milligrams per liter in the concentrate, and that our recovery is greater than 94%.
Right.
And so those are well above what we outlined as sort of the base minimum that we needed to see out of this. And we didn't need to necessarily see all of them hit the base minimum. We want to see at least some of them get above the base. Now we're seeing all of them exceed what our expectations were. So we're seeing very strong performance. Right. Out of the pilot.
So those numbers are quite attractive because I think one of the early criticisms of you guys was fairly low grade stuff. So now with, obviously you've just explained what you're doing in terms of being able to, flow more across the sorbent, that'll really, really help. And the fact that you've got this kind of modular system going on. So this really is a literally cookie cutter approach to building up that scale overnight. So what exactly has the pilot plant used as the model, and how do you replicate that at scale?
Yeah, so the design of a commercial system is highly dependent on the performance of the pilot. The pilot's really designed just to collect data. The results that we're getting in the field are not that dissimilar. We're getting better performance because we've been able to optimize in the field with all of the testing that we've done because we're flowing in real world environment and flowing high rates. We're able to tailor the system a bit better, having access to lots and lots of brine versus a lab environment where you're limited. So we've been able to get that performance higher, but the results are not that unexpected from our perspective because we've been looking at this for a long enough time that we understand it. And so bringing that to a commercial design is you take those results, and this, especially ion exchange absorption technologies, they scale very nicely. There's a certain general size of what you call column or vessel that is industry standard. And the math that you use to calculate your pilot size of that vessel to your commercial size of that vessel is well understood from years and years of ion exchange development. So not in lithium necessarily, but in a water softener ion exchange. Use water softening for all sorts of different applications across the world to treat water. And so we're just applying that now to treat water for lithium. And so you're able to scale up very comfortably with low risk. And I think that's really what this is, because the end of the pilot will enable us with the partners that we're working with to design a commercial facility for our plant. So while we may pilot again next year, that will not be for the purpose of designing the plant. That will be for more our partners, our offtake, our project finance, that sort of stuff for validity, but not necessarily for the design.
So validity for being able to kind of create concentrate for their specifications. What was it for validity?
Well, I think when you look at some of our plans into 2024, one of the things we're looking at is there a necessity for us to build the full process?
Right.
And we haven't made that determination yet of whether or not we're going to do that, but we are looking at it very carefully because it makes sense to be able to produce a lithium product, a hydroxide, we're aiming for hydroxide, on site, show people how to do it. Lithium Americas did this in the Thacker Pass project. because they have, just like us, somewhat of an unconventional process, so showing that they can go the whole way
Right.
is very meaningful. It's not, again, it doesn't help the design. The design's already done for the plant by this point in time, but it helps when you're talking to financiers or offtake potential partners or strategic partners. You can bring them into the facility. You can show them how the full process works. You can show them, here's the hydroxide we're producing every day from this plant. And so I think for us, that's the validity I'm talking about. That's why you would pilot next year, is to bring that to the market that needs to see it.
So what I'm interested in is terms of the kind of return on capital invested, right? So you can't go the whole way down hydroxide, kind of capture more of that value downstream, but there's a kind of CapEx component to that. Because it's relatively simple. It's a relatively simple process you've got in the sense that, okay, you've got a whole, it's quite deep holes.
Yeah, they're 2.5 kilometers.
But there are not too many of them, right? How many would we be talking about?
We, in the PEA that we announced, we have 68 holes for production injection. It's likely going to be more than that, but we're also likely going to see more, because we're going to look at a higher capacity. So we're contemplating, the PEA contemplated 20,000 tons a year. Yeah. We're contemplating somewhere between 25 and 30 for the first plant.
Okay, so and how do you kind of phase those? Because obviously 2.5 kilometers is a chunk of equipment and time, money, and all that kind of good stuff. Do you kind of phase those over a period of time as you extract? Because, I mean, how's it work? What's the arbitrage?
Well, I think that the really important thing to remember is that even the whole diameter, which means that the drill steel we'll use, the drilling bits we'll use, the drill rigs we'll use, are all Alberta standard equipment. Yeah. So you can literally go to the local drill yard and pull the equipment you need.
You're not
going
to overpay, right? Yeah, for sure.
So there's lots of opportunity to get pretty much every drill company in Western Canada that operates to bid on the drill, so you can get pretty solid rates to get all these holes. But it is a program. You'd start the program with a series of rigs. You might have 4 to 6 rigs running, doing the holes, and and multiple holes will be from a single pad. Yeah. So because we can the past 20 years we've perfected directional drilling, so you can drill directional holes and do a fan from the same pad, so your surface footprint's very minimal. But this technology, the drilling expertise, it is stock standard Alberta expertise. We're not going anywhere outside Alberta to get what we need.
Right. So coming back to that kind of return on capital invested and how you kind of phase that is, it's a very difficult one, because you got to say, well, if you look at certainly you were charged to kind of supply demand deficit going on. We want to be one of the first movers, capture that value, but at the same time, you don't necessarily want to front load a kind of CapEx program into a market which isn't quite there yet. It's growing. So again, what are the kind of levers and the considerations there in terms of how much you deploy early on versus, I guess, a slightly more Australian model of let's build things slowly over time and therefore have a less diluted environment?
Yeah, and I think that really depends on your access to capital and
the cost of capital
and the cost of capital. Yeah. So is it equity that you're issuing, or is it debt? Are you supported by government and strategic partners? And I think that when you look at the landscape today in the critical mineral space, and especially lithium, it sits on the top of this, I think. There's never been a time that I can find, and I recall, that there's this much access to capital, because we need these critical minerals.
Are you talking about the debt or the equity?
Just across the board, but more focusing on, in a sense, on project finance. So the capital to build the plant, which is what you're asking about. Yeah. I was at the International Energy Agency's inaugural Critical Minerals Forum a couple weeks ago, invited by the Canadian government, and over 50 delegates were there from countries, ministers of energy, ministers of natural resources, minister of labor, from all of these countries, and they're all really saying the same thing. Yeah. We want to be able to control our critical mineral supply, but there's not enough of it. Yeah. And so when you have that big of an organization represented by that many countries, really in unison saying, we really need to get these resources. Mm-hmm. And a lot of people look at it as like China is, we're trying to get off of China, but it's not actually that. And I think that it's more of just looking at it from China does have 80% of the production. And so that's a risk to anybody. And so it's not so much about a China option, it's about having the ability to produce it yourselves. So even France is talking about mining to get the resources they need. So there's a definitive mentality shift towards, and everyone's looking at sustainable best practice mining. That's where DLE really has a leg up on that. But everyone's looking at mining as a critical solution as part of the transition to through this electrical revolution that's happening. Mining, production of minerals is absolutely critical to transition to electrification. And so everyone understands that now, and there's support. So in the federal Canadian government, there's $3 billion in federal funding. There's 30% tax credit. There's strategic partners coming in big dollars. You've seen across the space multiple examples of battery companies and OEMs coming in all the way to the mining stage to invest to get access to these critical minerals. And then even the United States is funding Canadian projects through the Department of Defense Title III. So there's just this whole access to capital that's not normally available for a mining project. And so normally you would say, well, you would build it slow, you'd build it small, you'd sell it, that sort of thing. But there's, in a very rare time in history, there's the ability for a company like us to actually find the project finance and find it in a non-dilutive way.
Right.
And so I think from that perspective, it's what E3 is going. That's probably our big part of 2024 is, we believe in developing strong relationships with our potential customers to find a mutually beneficial path forward. What we're looking for is access to capital because it's our biggest constraint. We need to find the capital to build a plant. They need the supply. And I think that's what you're seeing some of these deals really focused around is, so those are the two main components. How do we manage a structure of an offtake agreement that brings that together and is structured so it's beneficial to both parties? And I think that's where the industry is going, very collaborative approach. And those companies that are collaborative and are willing to be collaborative with the downstream part of the industry, the battery and OEMs, are seeing strong success in getting access to that capital.
Yeah, and I think we've seen that in the rare earth space. Well, it's critical minerals you're talking about, but rare earth space, we saw that at a conference in Barcelona in May. It's interesting, a few things came out. It wasn't an anti-China rhetoric. It was a let's take control of our own destiny conversation, which was a much more positive conversation to have. But they were all after one thing, the same thing, which is partners, strategic, government, whatever, on the money side of things. So, and again, this point I raised earlier is it's the cost of that capital. If it's cheaper, we can go harder earlier. If it's not, then obviously, our shareholders might have an issue short term on that. So that's an interesting challenge.
Yeah, and I think from our perspective right now is that it is very easy, relatively, to build a gigafactory, to build a battery manufacturing facility, relative to a mine. The time frames that are required to do the engineering, the risk to that capital is very low because when you turn it on, you're likely to make batteries that work, and maybe you have a high scrap rate at the beginning, but you're able to tune that, and you see all these battery companies reduce that scrap rate over time and become much more efficient. Whereas with the mining, there's all sorts of risk that's not there. There's the exploration risk, there's development risk, there's the geological risk, and then you still have to build a facility to produce it. And so it just takes longer. It takes more time to design, more time to engineer. You want to be more methodical with it because you need to reduce that risk more. There's more risk to reduce in a mining project than there is in a battery. So they're able to bring them on stream faster. So it makes sense why people are saying there's going to be a supply deficit, because you can just build these factories faster with lower risk than you can a mine. And so you need the materials to keep up, which from our perspective, the world is going to be in short supply of some of the critical minerals, lithium being one. And so I think that's why you're seeing the capital come in, because it's de-risking the bottleneck. Right. And the Canadian government, the federal government, the United States, the industry writ large, the battery OEM industry, they're all in unison saying the same thing. We need these minerals, we need to do them sustainably, and we need to support them.
Right, and you're going to go, sure, no problem, but you got to support us financially, which is fine. The other thing I think is you're big, right? You say you're 5 times larger than the nearest competitor in North America, right?
But we have 5 times more measured indicated resources than the entire rest of Canada combined.
Which is nuts, right? Yeah. So scale-wise, you're super attractive.
Yeah.
Let's talk about timing of that, because you kind of got to go through a couple more phases, and kind of, and into next year, I suspect you'll deliver on a lot of those things, which will be good news for you guys, because we've seen OEMs kind of moving upstream and so maybe taking chunks of companies, 10% here, 15% there, battery manufacturers out of Korea, Japan, etc. Where do you think you need to get to be able to kind of get people like that? Because they're strategic, they're offtake partners. It's a different type of money versus the government, which sometimes is a bit retrospective capital, strategic partners, which are just, smart money or dumb money, depending on which way you look at it. Where do you think you need to get to as a company by the end of next year, say, to kind of maybe pull some of those guys and girls in?
Yeah, I do think that timing is important. I think that those companies that can deliver a reasonable amount of product in the next, say, 3 to 4 years are going to be able to find that. There is a time where that sort of, I think there's the concern of not having enough supply for batteries is there, and it's real today.
Yeah.
At some point in the future, and I don't have a crystal ball of when that point is, but at some point in the future, everyone's going to feel like they have enough supply to get them through the next couple of years, and that the supply is going to come on fast enough after that. There's a bit more calm that will come into the industry. That's not there today, but I think it will come over time, that the industry will calm down. I think for us, we see the opportunity, though, because of the jurisdiction we're in, because we're in a democratic country that has democratic principles, we have good environmental controls on how we operate. Just inherent to DLE, we have environmental best practice in just that system, that we're able to attract interest in it. But we still need to have a product at offer in a time frame. And I think for us, it's all guns blazing to try to get 2026 commissioning and operation by the end of 2026.
Okay.
And so
that's the brief to your team. So we got to aim for this date.
We got to aim for this
date driven.
Yeah. And so we have a 30-person team. We're working through the pre-feasibility study. We'll have the internal results out completed by the end of the year. We'll have the published version out in early Q1.
Right.
And that's the catalyst to move this into really, like after pre-fees, you really start to knuckle down and get the engineering done.
Right.
And move through bankable feasibility into detailed engineering. And so we will be expanding. Once we see the pre-fees, we're happy with it, we're going to be expanding the team to manage feasibility, growing that into the operations team that will manage detailed design and construction. And again, like, I can't overstate how important it is that we're in Alberta, because we have that skill set to develop this project in Calgary. No one has to move here, no one has to fly in, fly out.
Right.
Everyone can get a job at E3 with the expertise we need, and from the Calgary workforce, from the Alberta workforce, when you're looking at how we're going to operate. We're 45 minutes north of Calgary, where the pilot sits. That's likely in that general area, north of Calgary, south of Red Deer, if you're familiar with the Alberta geography, is where the first plant will be, somewhere in that location, which means all of those local communities who, there's lots of operations folks that live there, drilling, all of those sorts of things, live in that area as well. And so from an operations perspective, we have access to expertise. And I think that really will be able to help us drive this project forward. We have a very supportive provincial government in terms of regulatory. They put the regulatory into the oil and gas regulator in Alberta. That has been substantial. They've rewritten what they call the directive, which is our guidelines of how we apply for licenses and permits.
Yeah.
They've been rewritten to include language for brine-hosted minerals that includes lithium. So all of the pieces are now there to go.
Right.
So we just need to get, and this is why, like, for us, this fall, and specifically more so 2023, has been the big paradigm shift. And it's almost done. Like, we're just finalizing the last pieces of the pre-fees right now. The pilot is successful. We'll have the final results out here in the next little while. We're going to be talking about how we made lithium hydroxide at battery grade from our equipment manufacturer that is a commercial equipment manufacturer. And so when all of these pieces we're able to talk about more fulsomely in the market, and then they all lead into the culmination of the pre-feasibility study, the paradigm shift is over. Now we're fully into, okay, we're going. This is becoming...
Right. Yeah, that's what I'm getting from this conversation, that we have to and use that phrase for a paradigm shift from the concept, the theory, through to actually we proved that.
Yeah.
Now we're proving it at scale, and we're increasing the rates of production, and even through down to the concentrates. Brilliant. And I guess what you've got going, I know you've touched on it a few times, and maybe it's a conversation for another day in terms of the ESG element, in terms of you're then sort of, it's kind of like oil and gas, except they don't pump it back into the ground like you're going to. So maybe that is a conversation for another day. Just finally, the PEA was done when?
3 years ago.
Right, okay. Very different environment.
Yeah.
Now, PEAs are kind of plus or minus 30%, I say that anyway. But obviously a few things have happened since then. The PFS, do you think you're going to be able to manage people's expectations around the CapEx, OpEx component of that? And more importantly, I guess get them focused on margin.
Yeah, I think it's hard to talk about some of the finite details of that before it's published. But we do know that over the past 3 years, the inflation of capital equipment is something like 32 or 33%.
Yeah.
And that's based on like the engineering societies who track that sort of stuff. So, across the board, not just E3's project, everyone is suffering that inflationary environment. So yes, the cost of capital has gone up. But along with that, the price of lithium has, even though today we're in a deflationary lithium price environment, it's still very high. It's still a very solid price. And there is, most analysts are calling for yet still a strong increase in price over the next 2 to 3 years as we get into, basically what's happening is all of these battery factories turn on. And so they start consuming lithium. And when that happens, the supply deficit hits pretty hard and the prices go up, just natural economics, right? So I think from that perspective, the lithium price inflation is probably well overcompensating for the capital cost. But the challenge with larger capital is that, that number still has to be financed so you can build. So it is, the inflation will challenge the industry, across the industry, because things are just more expensive to build. But I think there's a lot of offsetting to that I think you don't normally see, like government supporting it, like industry supporting it, downstream industry supporting it.
Well, and improving your own efficiency at doing it as well. But you seem to be demonstrating quite nicely.
Yep.
Not too bad. And people should look at the IRR, look at the margins, and that's the important thing. And
it'll all be out in Q1. So we'll have that detail.
Brilliant. Well, come and tell us all about it.
Yeah, definitely.
Good conversation. Thank you.
Yeah, thanks.
Yep.